Welcome to the new segment that I'm calling Mailbox Tuesdays, where we answer questions that you've sent in over the last month. In this segment, I've got 4 questions that we're going to delve into in a little deeper dive. So stick around and I'll see you on the other side. If you've got questions as I go through this presentation, please leave them in the comments section below, or simply just send me an email and I'll get back to you as soon as possible. In addition, if you enjoy this episode or get something out of it, please feel free to hit the like and subscribe button. And with that, let's get to this first question. And it is a buy-side broker necessary when encountering a business listed by a seller's broker online? The answer is, it depends. It depends on the quality of the broker and the offering memorandum and data room that they're putting together. If you get a broker, and I've seen this in just looking at businesses online myself for purchase, if you get a broker that's got a 5 to 7 page offering memorandum with little or no data in a data room, then the answer is you probably do, because all you're getting is just a summary at a very high level of what the business is and what its offerings are. So to get the data and the information that you need to make a prudent financial decision, you're probably going to need a broker to put together that needs list and present it to the other broker online so that you can make an important financial decision. And again, hiring a business broker comes down to your knowledge and expertise. If you're not from an executive background with a lot of M&A or financial experience, and this is your first business, you probably should think about hiring a business broker if you're getting a real short version of an offering memorandum. Now there's the other side of the equation, which is kind of where Bill and I sit, in that when we put a business to market, take it to get market, we're putting together a complete offering memorandum. And that offering memorandum covers the entire scope of the business. This is the table of contents from a business I took to market in 2020. And it was a small business with a purchase price of about $1.2 million. And as you can see from the table of contents, it was fairly extensive and was 65 pages in length, covering company information, products and services, current sales processes and marketing, sales analysis, a SWOT analysis on the business, which is really important to have to know what those strengths, weaknesses, and opportunities are and potential threats to the business. In addition, financial analysis, which was a company balance sheet, asset list, standard billing process, profit and loss analysis for the last 4 years, facility, lease information, personnel, owner transition, and exhibits as we felt necessary. So if you were looking at a business and you got a 4-page write-up with little or no data behind it, then you're probably going to need a broker to get that right kind of information to make a prudent financial decision. If you're lucky enough to deal with a broker who does this kind of work where this is all backed up by a data room, they've done a lot of the analytics for you, and you should feel comfortable if you've got the knowledge and expertise to make those judgments and analyze what they're giving you to move forward. So I hope this helps on this question, which is, again, is a buy-side broker necessary when encountering a business for sale from a seller's broker online? This next question is really a follow-up to the previous. Are the fees or commissions split between brokers like in a real estate transaction? And the answer to that is no. In the brokerage business for businesses or merger and acquisition industry, brokerage fees are not split. So if a seller hires the broker or M&A advisor to take their business to market, they're paying them all the way through that transaction to make sure that they get the best representation. If a buyer hires a broker, they are paying for that broker out of pocket. Now, on occasion, we will pay a referral fee if we're having a hard time getting traction in the market with an offering that we've got. So if we've got one of those situations and you get a call from a broker saying, you know, I know of a buyer, would be probably a good fit, but I don't represent them, then we will pay a small percentage of the commission in a referral fee if that buyer that they refer to us actually steps in and buy the business. But for practical purposes, when you hire a business broker or an M&A advisor, you're paying for their services to represent you. This next question is something that I've really not addressed on the channel before, and I really thought it was a pretty good question, and that is, what role does a CPA play when purchasing a business? Now, to answer this question, I'm going to segment the size of the business becomes fairly important. So if you're dealing with a business with a purchase price of, say, in excess of $10 million, and especially $20 million, the CPA's got a much more active role in the due diligence part. If the business is, say, $5-6 million in enterprise or purchase price, then really the CPA is probably going to do a couple things. And first of all, they may weigh in on the allocation of assets. So especially in an asset purchase, you're going to go through and negotiate as part of the letter of intent the allocation of assets between the buyer and the seller. And your CPA, whether you've got a buyer or you're representing a seller, may want to weigh in on how that's put together. And the second thing they'll do is really assist in due diligence. So if you're a buyer, having a CPA come in, again, now this next part really goes back to that, how big is the business? They may come in and do what's called a quality of earnings report. And that's a full dive into the financials, business practices, accounting practices, customer quality, and things of that nature. And at the end of the day, issue a report on that business and the quality of earnings and enterprise value. Now again, I only see these when the enterprise or purchase price is usually above $20 or $30 million. And again, on the smaller businesses, you may want to retain, especially if you're a buyer, a CPA to look at, review the books, your accounting practices, cash flow analysis, and cash flow forecasting on the business, which will really help you make prudent financial decisions. So CPA involved, usually again, it's depicted, it really split between the size of the business as to the activities that they may or may not get into. This last question has to do with, how do you value a business that involves real estate? Well, the simple answer is they're both valued separately. Now, most of the time when I see a business that owns real estate, they're both held in separate either LLCs or S corporations for tax purposes, and the business is paying rent to the other LLC, both owned by the seller. Now, the first thing is evaluator that I look at, or when I'm putting together a valuation, is to see what the fair market rent is for that building or the facility, and then apply that fair market rent and an adjustment to the business's cash flow. And that could either help them or hurt them on the value of the business. And that way you've got a fair market value for the business and a fair market value for the real estate. Now, 95% of the time when there's real estate involved in a business, the buyer coming in usually just wants the business, but seldom do they actually purchase the real estate. But if they do, the good news is SBA offers very competitive rates for that type of a purchase on a 25-year AM. So it makes it very affordable for the new owner to buy the real estate and continue that relationship of taking cash flow out of the business to buy another asset. So again, good question. They're separate values. There is some market rate adjustments being put forward. But at the end of the day, if you've got the business and the business is going to be there for a while, especially in that marketplace, might be a good idea to look at purchasing the real estate as well. I'd like to thank the individuals who sent these questions in, and I hope I was able to answer them in the detail that you wanted. Again, if you've got questions, leave them in the comments section below. And with that, I'll see you on the next episode.